Welcome to Discover La Jolla, where we showcase the jewel of San Diego, and that's La Jolla, California. This morning is awesome because we've got Pete Williams of Farmers Insurance in the studio, in the house. Pete, thanks for coming in this morning.
Thanks for having me, Jim.
Pete, full disclosure, handles my personal insurance for my family for auto. We have an umbrella policy. We've got general liability policies with you, and you've handled our insurance for years. You also handle the insurance for 90% of all my real estate clients. So thank you for doing such excellent work.
Thank you for sending them over.
Oh, yeah. So you've been a licensed insurance agent for 18 years now.
Yeah.
You've been in La Jolla since about 2020.
You're right.
Okay, so you bought a farmer's
So
franchise?
I started a farmer's agency back 18 years ago.
Okay,
And then bought the La Jolla Farmers Agency in 2020.
got it.
Yeah.
And what a great location, 1020 Prospect. You're right in the heart of the village. Everybody knows where your office is.
Yeah.
You're a very big part of the community. I know that you handle the insurance for many of my fellow real estate agents, like lots of them, like over probably 75, I mean, a lot of them.
Tons. Yeah.
Tell me about the other types of insurance you do besides just homeowners insurance and fire.
Yeah. The other policies we have for you are life policies for your kids as well. So
Oh, that's right.
So we
You-
do a lot of life insurance, which
Okay.
people use that to kind of protect the mortgage when they buy a house.
Okay.
Protect their assets as well. So if you only have one person surviving, then you've got enough to basically stay in the house. So life insurance is very important.
Okay.
We do a lot of that. Auto insurance, obviously you have to have it. Umbrella insurance is very critical. Anytime you own a property that's worth more than 500,000, 750, which is a tiny condo these days, you should have an umbrella policy.
So
and
tell me, what is an umbrella policy for some of the viewers that may not know what that means really?
Yeah, it's basically the policy that's going to get you covering your total net worth. So
I
you
see.
can only get 500,000 or so on auto insurance. You only get 500 or a million on a homeowner's policy. But the way to get up to 2 million, 5 million, 10 million to protect yourself is.
So if you ever had a major incident, major liability incident, some sort of accident, liability where you were going to be liable and you needed millions of dollars, you'd have a general umbrella policy.
Personal umbrella.
Personal umbrella, they call it. Okay. Thank you for explaining that.
Yeah. So that's a personal umbrella. It goes over your home, your cars, your rental properties, boats, motorcycles, things like that.
Okay.
We do a ton of those.
Okay.
And, people that live in La Jolla, they should probably have a $3 million umbrella minimum.
Okay.
Because their houses are worth at least that typically.
Okay.
So, so life, auto, home, we do a ton of home, and I'll get into those, but we're starting to see homeowners insurance premiums come down a little bit.
No way.
On
Come on.
On high value homes.
All right.
On high
And
value. So
why would that be, Pete?
yeah. So in Rancho Santa Fe, a lot of the companies got out of that market. So we work primarily in Rancho Santa Fe, La Jolla, Carmel Valley, Del Mar, Scripps.
Okay.
They're kind of up and down the coast, Solana Beach as well. But in these high value home markets like Rancho, companies like Chubb and AIG, they got out of the market.
Yeah, they did.
6 or 7 years ago.
Yeah.
So
State Farm too?
State Farm got out of the market in 2023.
Okay,
Yeah.
so more recent. But
Yeah.
like Chubb's been gone for 6 or 7 years.
Yeah. So they renewed a few policies. They're kind of hanging on to a couple where they consider them not in extreme high fire zones. But now we're starting to see those companies come back into some of those markets, and they're coming back in and they want market share.
Oh, so they're pricing it accordingly.
Correct. Yeah. So they're coming in and undercutting everybody. I'll give you an example. So I had one home, we insured it for $9 million.
Okay.
And that was 2 years ago. The guy paid $101,000 for his homeowner's premium.
Wow.
He wasn't happy about it, but he said, I got to cover myself properly.
Right.
This year, we did the renewal in February, and we got that premium for $67,000. So we're starting to see.
Wow.
And it wasn't Chubb or AIG that came in at $67,000. It's a different company, but they want market share. That company wants a market share.
Right.
I had another one. We ran it through AIG for $9 million, and that premium came in at $43,000.
Huh.
A little bit different area of Rancho, a little less risk, but
Okay.
I've never seen $9 million in coverage for $43,000. And we've been insuring in Rancho for many, many years.
Is it the fires primarily that has really driven these premiums so high, or are there other factors besides the fires?
I mean, that's the biggest risk.
So the fire.
Yeah. So the insurance companies look at, what would they have to pay out basically if there was a claim? And so not only do you have $9 million to rebuild the home, you've got personal property, other structures, loss of use. So you got to pay for them to live somewhere else. So that $9 million in coverage to rebuild the house might be a total claim of 13 to 15 million. And so they're pricing it accordingly to make sure that, they're profitable over the long run. And that's kind of the main reason why a lot of these companies left. So you mentioned State Farm, Allstate left, Liberty Mutual left, Travelers isn't really doing much.
Wow.
USAA is not doing much. But the reason they aren't in California is not so much because of fires, it's because of pricing. So they couldn't get the pricing that they really needed to get, and that was because the Department of Insurance restricted them from taking price increases. So these other companies like AIG and Scottsdale and those types of companies that we're doing a lot of policies through for high value homes, they're not restricted by the Department of Insurance. So it's admitted versus non-admitted insurance companies. So admitted are the companies that, we all know the names of.
Right.
You'd be able to rattle off 6 or 7 of them. Those companies are very highly restricted by the Department of Insurance on pricing.
Interesting.
So they can't take massive price increases, which means they can't be profitable. So they
can't stay.
So they left. Yeah.
There you go.
And so the companies that do high value homes, you're not going to see, like State Farm do a $7 million house or, 7,000 square foot house. That just wouldn't happen because they just don't go that high in terms of coverage, but they also wouldn't be able to price it where they need to be. And so, like, for example, when State Farm was still in the market, let's say 2022, we had times where we quoted something at like $40,000 and they were coming at like 10 or 12,000, which is crazy.
Okay.
So the company at 40 was pricing it where they felt like they had to price it to be profitable. State Farm was pricing it where they were restricted, to. And so that's why you didn't see them last much longer. So once we started to see those massive price discrepancies like 2020, 21, and 22, we had a feeling that something was going to happen there and they were eventually going to be out of the market because, that person has a water claim and, the State Farm pays out $250,000. They just lost, $237,000,
right.
just that year.
And that adds up quick.
That adds up way too quick. Yeah.
And so, let's talk about fires a little bit because unfortunately California's had a lot of horrible fires. San Diego's had a lot of horrible fires in the last decade. There's now rules for homeowners to do their own fire inspections. Is that correct? And that the Department of Insurance is mandating this?
No, the Department of Insurance doesn't mandate that.
Okay.
That was, you're talking AB 38, so Assembly Bill 38, so that's passed by the state.
So the state is mandating this.
Right. So the state, I think, in all honesty, has figured out a way to make money off of these inspections. And so they charge like $150, and they pick a couple things out that either the seller has to do before the home closes or the buyer has to do within 12 months of the home closing, after closing.
What are your thoughts on this? Is this a good thing?
I mean, if we're being honest, I think it's a money grab by the city.
I see.
And by the state.
Okay.
So, and it's also, how they've created jobs as well. I never liked that term, but so now they have a special guy that goes out and he does the inspections. And I've even talked to that guy in San Diego, and he said, I don't really know what I'm looking at, but they give me a checklist and I got to, send it back and make people feel
I guess it's a movement, right, for homeowners to try to create some defensible space to keep the dead brush away from the actual property line in an effort to try to help prevent more of disasters.
Yeah.
I mean, it's an effort.
Correct. Yeah.
Moving in, but it's certainly shifting that responsibility onto the homeowner. Because in the past, I remember like homeowners would almost get in trouble for clearing brush because they might be killing a native species or destroying a habitat of the red, polka dotted frog or something like that, right?
Exactly. Yeah.
Yeah, it's interesting. Sure seems to be a lot of confusion still in the industry.
Yeah.
Who's supposed to do what? Who's going to pay for what? Is it really my responsibility? Should it be the buyer's responsibility after you close it? So there's still a lot of confusion around it.
Yeah.
I'm sure you get called on it all the time, every day.
Every day.
Every day.
Multiple times a day.
Every
Yeah.
day. We should just create a CD with all the answers and you just
just play.
To learn everything, just press 9.
Yeah.
And there's Pete telling you all the
That'd be
answers to your questions.
So what I tell most realtors is, and the listing agents don't necessarily, the buyer's agents aren't necessarily happy about this, but I say, put the onus on the buyer's agents to get whatever work done. Because the buyer's agents have 12 months to do it. If the seller is going to do it, they have to do it before the close of escrow, which can delay the close of escrow, because then the city has to come back out and inspect it again, check everything off. And
that's where you're going to get hung up, because now you're relying on the city to show up on time and to be there and to get, I can see how, especially in a fast escrow.
Totally, yeah.
3-week escrow or 1-month escrow.
They're not going to be back out.
Right.
And so if you give the buyer 12 months, the new homeowner 12 months to get it done, the secret here is the city doesn't have enough manpower to actually go back out and double check that everything is done. But what I usually tell the homeowners is the insurance company is actually more, they're more aware than the city, obviously, but they're also the ones that would pay out a claim if it happened. And so clearing a brush or, cutting a tree limb back or things like that, the insurance company's going to make you do that anyway. They're going to be more strict about that than the city would be. City's just doing it because they're going to make a little bit of money.
I see.
The insurance company's actually looking at, hey, we need to properly insure this house for one, but also we need to make sure that we've got things cleared back. And so usually that checklist might even be longer, but I usually find homes that are in escrow, somebody's done a pretty good job of clearing things back or, cutting the limbs back or things like that. So the checklist from the insurance company might be longer than the one from the city. So you might as well put it on the buyers.
Okay.
Give them 12 months.
Got it.
Because chances are that stuff will be done.
I imagine there's got to be some new companies that are showing up to help with brush clearing. I would imagine that's a new business. There's probably some new brush clearing contracts that are happening around San Diego County.
I would guess.
What else can homeowners do to lower their insurance premium? Like, what are some common things that are easy steps that someone could take, like getting an alarm system, or like, tell me some of those.
Yeah, so that used to give you a discount. Now it's pretty much a requirement by almost every company. So burglar and fire alarms, centrally monitored.
Okay.
We're seeing, so that's, as of the last couple of years, pretty much every company's requiring that now.
Okay.
The next one is a whole house water monitoring system.
Okay.
So that's the Flow by Moen device is the one that we see is most prevalent. Doesn't cost a lot. It's like $750 to install it, plus the device itself. So most companies are requiring that now, or some kind of device. Doesn't have to be that one. And then automatic gas shutoff valve. So if there's an earthquake, the house doesn't burn down because of a gas leak.
How would that work? So if there's an earthquake, something's triggered, like an alarm, and it immediately cuts the gas?
There's a little ball that goes into the gas line and shuts it down.
Huh.
Yeah.
So is this expensive for some of the older homes that are built in the 40s and 50s to retrofit some of this, or is it fairly still easy to accomplish?
Yeah, it depends on the setup of the house. Everyone's a little bit different, but I've seen them $1,000 to maybe $2,500 to get that installed.
Okay.
Yeah.
What else would help someone's homeowner insurance policy be less?
New roof.
New roof. Okay.
Yeah.
So roofs are big.
I mean, in San Diego, it hardly ever rains, so nobody really is changing their roof out. I've seen some wood roofs that are original from the 70s.
Right.
The shingles are curling, and you can just tell there's mold growing in there.
Yeah.
And, all kinds of bugs probably. So, but when somebody goes to buy that house, we're not going to find insurance on it because it's an old wood shake, roof. So putting a new roof on definitely helps. Okay. And then old electrical, like Zinscope panels, Pacific panels.
All that stuff that was...
like 60s and 70s. Yeah, those panels were terrible.
So as an insurance professional, sometimes you'll get a home inspection, right? And you'll see that it's got an old Zinsco or whatever, and that just gets red flagged, right?
I mean, if we disclose that it's got a Zinsco panel, barely anybody will insure it. I mean, we might be able to get one company that would do it.
Wow.
And so the homeowner needs to swap it out.
Got it.
You know,
And then show proof that it got swapped out and all that, right?
So a lot of the homes in La Jolla, I mean, obviously this is La Jolla podcast, but a lot of the homes in La Jolla, they've got wood shake roofs still. Not a lot, but we still see quite a few on the coast. They're old. It's going to be difficult to find insurance. Usually we'll put the California Fair Plan on those to start, and then they'll swap the roof out, and then we go take it out to all of our markets, and we've got tons of options for them.
So the California Fair Plan is sort of the emergency backup insurance that most homeowners can still get, correct?
I mean, that's the whole thing about the Fair Plan is we can put a policy on any house in California.
Okay.
And I would say 97% of the submissions that we put in are approved automatically. So we get
Really?
them within 10 minutes.
Huh. Okay.
So we can bind the policy. They're always going to do an inspection.
Okay.
So, but they're not going to cancel it for, let's say, an old wood shake roof.
Are they super expensive?
Very inexpensive.
Huh.
Especially in a place like La Jolla.
Because they're subsidized by the state?
Not really.
Not really, okay.
No, the Fair Plan.
Well, leave it to me to ask a question that doesn't make sense.
That's good because actually, if you called 10 insurance agents right now and you said, is the Fair Plan subsidized by the state? They would answer yes.
Okay.
Even insurance agents don't know.
What is the truth?
So it's actually backed financially by all the admitted insurance companies. So we already talked about admitted. So companies like Farmers, State Farm, Allstate, Liberty Mutual.
Paying the subsidy.
Because it allows them to take on less risk because they put the fire risk over with the Fair Plan. And then these other companies are just doing like the water leak coverage and things like that, liability.
They're bifurcating.
Correct. Yeah. So,
the coverage.
So it's a win-win for them because when a claim happens, it goes through this entity called the California Fair Plan, and they don't have to actually pay out the claim. So instead of them paying $1 million, you know, they're going to subsidize the Fair Plan based on their market share in California.
Fascinating. There's a lot going on in this insurance business in California.
There's a ton.
A lot changing. Companies coming in, going, premiums going up. Now some premiums coming down. Mm-hmm. Where do you see the future in the next year or two? Is that a loaded question?
Definitely. So the last 3 years have been the best for my business, for sure.
Okay.
So it was actually June 2nd, 2023 is when State Farm left. The next week, Allstate left. And after that, people just freaked out because they want a name brand company. So, you know, we're farmers. We've been around for about almost 100 years.
Right.
They want a company that is admitted, which is, you know, again, name brand. They want a company that's going to pay the claims. They want an agent, you know, so
that they can talk to.
We're just checking all the boxes for the last 3 years. So I'm hearing that State Farm may come back later this year, but they're going to be very selective on where they insure. Who knows as far as pricing goes, because they haven't gotten all their pricing approved yet by the Department of Insurance. So they have to submit, you know, all kinds of paperwork and documents and get attorneys and all that type of stuff. So it takes a long time for them to actually get their pricing approved. The Department of Insurance wanted them to come back last year, and they said, well, we need to take like a 54% rate increase, you know, across the board. And they said no. So it's hard to say what pricing is going to look like, but I'm hearing they may come back at the end of this year, but it's hard to say what that's going to look like.
Well, in the meantime, you're here.
Yeah.
Farmers is here. You're on Prospect, 1020 Prospect. You got a full team there. You handle all aspects of insurance, basically. And you do give that personal touch, you know, which I think is really important, that you're there, you're answering the phone, you're responding to people. I know when I call in and I've got a new client I'm referring to, you're right on it, your team's on it, and you're out shopping and trying to find a solution. Might be a challenging property, maybe it's an oceanfront, maybe it's one in a canyon, maybe it's one that was part of, you know, has an active fault next to it. I mean, there's all kinds of stuff and all kinds of things that affect it. But Farmers is here, Pete Williams is here. And that's basically all you guys need to know. I mean, that's it in a nutshell. Pete Williams, Farmers Insurance. Thanks for being here, Pete.
Thanks, Jim.
Stay tuned for our next episode of Discover La Jolla, and we'll see you soon.